It's hard to watch any sport and not see a zebra featured at least somewhere around the sports field. They're around the world and, of course, in banking, and that is Investec. Today, interim results out of Investec. This is the MoneyMakers. I'm Bruce Whitfield. Tonight, Investec Chief Executive Stephen Koseff on the numbers, the state of the markets and banking in general. You're in a pretty good space right now, Stephen. Post-2008, there was the rationalisation, the right-sizing, the condensing, if you like, of the Investec business, and it feels like you're in growth mode again.
Yeah, look, we've done a lot of work over the last few years. It was a bumpy ride. You know, you first had the crisis, then you had Europe, then we had some issues in Australia which we had to tidy up. I can't remember which one came first, and then you know, we now that's all behind us. We've still got a bit of legacy in the UK, but the UK economy is quite good, and we're starting to clear that quite nicely. So you're starting to see the Investec that you should see. Now,
Investec is, because it's an ever-changing beast, what's left in Australia?
We have a corporate bank, but
right.
it's a more part of the UK operation, an asset management arm, which manages our relationships in Australia, Asia and the Middle East, but it's done from Australia, so we have quite a lot of money that we look after, although the money is looked after either in Singapore or in London. And then we have a property fund which is listed in Johannesburg. They also released results today, which is an Australian property fund, but it's listed in Johannesburg.
And then in London, what's there? The private bank is there?
No, London we have big operation. We've got a big wealth business, top 3 wealth business in the UK, 15 branches around the country, manages almost £30 billion of third-party money. We have the asset management, global asset management business. We've got the South African business and the global business. Again, very big business, actually makes more than South Africa today, manages, you know, almost 50 billion pounds, 40 something, late 40s billion pounds. And then we have the bank, and the bank has, you know, corporate and institutional banking, the advisory business, which is part of that, very strong positioning in the mid-cap space, and the private banking business, which is evolving.
There was a time where South African companies had this love affair with the idea of growing in America. You dipped your toe into America and then took it out of the water really quickly.
We had 1,000 people there at one stage. Now we've got about 100.
Yeah, but I mean, are your global ambitions satisfied with the footprint that you've got right now?
Yeah, we're in the places we want to be at the moment. I think we learned don't go too geographically diverse. So we basically manufacture and have our hubs in core centres, South Africa and the UK, and then we have sales arms or operational, you know, distribution arms in other parts of the world. So you know, we have a branch in Ireland as well, but we have quite a big infrastructure in the Channel Islands, and we've got a small bank in Switzerland, and we have a bank in Mauritius. So we're in a lot of geographies, but the hubs are South Africa, UK.
And your customers seem in pretty good shape. I mean, I look at the bad debt levels, they are at historically low levels. Your provisions seem to be going up a little bit, but things seem to be
provisions came down, but in South Africa, I think you're in a different cycle to the UK. So the UK, we expect still further drop-off. In South Africa, you've got a more difficult environment, so we're not quite sure. We're not feeling it yet, but we're not quite sure what the immediate future holds.
I know the South African environment is certainly tough, but the private banking business, strong in South Africa, dominant still in South Africa. I'm interested to know what your view is on the great unknown, and the great unknown is what Adrian Gore is up to at Discovery. Because
you won't ask me that question.
Yeah, but he's up to something, and he won't tell anybody what it is.
Yeah, I don't know. You know, he obviously has got a very nice transactional business in partnership with FNB on the banking side through his card offering. There is some overlap in our markets, but you know, we've competed with the best, and we learned to go and compete on other people's fields. That's why we internationalised ourselves, just like the Argentinians did in rugby, came and played in the championship, and now a top 4 country. So, you know, we'll continue to compete.
But are they coming for you, do you think? Are they coming for your segment?
I think their client base is much broader than ours, you know, through whatever they do via Vitality, but I think there would be an overlap.
It's going to be an interesting battle. Are you shoring up your defences?
We have a narrower client base.
Are you shoring up your defences at all?
We always have to compete, and you know, we have very good client relationships. We have good products. We have good relations with our clients. We lend them quite a lot of money, and that requires a fair amount of balance sheet. So, and we have a big balance sheet. So, we'll have to see.
Because the top end of the market is fiercely contested. Everybody wants a piece of the pie. Standard Bank's got its wealth division, and FNB's got RMB. You guys are.
Well, we've competed with them our whole lives, so it's not anything new. So most of those firms we grew up against.
Your property business, that seems to be doing nicely too.
Yeah, we have two property funds. The South African Property Fund, which is listed on the JSE, also released results today. And then we have the Australian Property Fund. Then we have the other side of property, which is the trading and development side, where we will build offices, we'll build shopping centres, and they may be sold to our property funds or sold to the market, depending on the appetite.
There's an awful lot of listing of foreign property funds on the JSE right now. Is that a warning sign that perhaps things are getting a bit heated, that there's just too much leverage in the market and you've got people looking to exit out of their own funds?
I think what you've got in property is you've had, a low interest rate environment for a long period of time, and you're probably in a much tougher space going forward because rates are likely to go up. I don't know if they'll go up today. I would not. If I was Lesech, I would not put up rates today. But, we know global rates are going up, and therefore that will maybe make it a little bit tougher in property.
Does Janet Yellen scare you in terms of what she could and couldn't do in terms of interest rates?
No. Ultimately, interest rates have to go up. In fact, yesterday the minutes came out and they said most of these guys reckon the US economy is right for a rate rise in September. They indicated it will be slow, not fast. So the market got a lot of comfort from the fact that the US economy is growing, but also some comfort from the fact that it will be slow, not fast. But we will start getting global rates rising.
The issue of terrorism around the world is an interesting one. 9/11 was probably the most significant global terror attack. It attacked the infrastructure of markets, and markets had a panic attack. We're seeing sort of the spilling over of Syria into Europe, and the France attacks in recent days, and people dealing with that, and real upping of terror alerts in Northern Europe and the United Kingdom, where you've got your big operations. Is there a market threat?
It hasn't affected markets. Obviously, one would have thought that Monday it would have been pretty tough, but I think it didn't really impact on markets. But it is a big issue around the world. If it perpetuates, then you're going to have issues around people travelling and all. And
if it changes behaviour, if it changes the way people live.
People say, "Now, do I have to go there? No, I'm not going there." And I think that's the kind of response you may get, which can affect trade, and countries are going to get a lot more defensive as opposed to more open, and that can affect trade. But we've come through a very tough period in the global world. I don't think people in this country recognised exactly what happened with the global financial crisis. I think the world is coming through that, and you are seeing momentum in the developed world, and certainly the big economies are starting to move, and that probably will outdo any of the negative that comes from global threats.
Because we've been cushioned from the global financial crisis largely, we feel the effects in the currency perhaps, but that's geopolitics, it's macroeconomics, and some stuff happening in South Africa. But at the same time, we look at what's happening around the world. We look at the US debt burden, we look at the amount of money that's been printed in Japan. They've just gone back into recession. We look at Mario Draghi and the European Central Bank and the fact that they keep throwing money into the system. The real concern, and you've got the bears on the one side saying we're headed for a calamity of unprecedented proportions. The experiment introduced by Ben Bernanke and adopted across the world is about to come horribly unstuck.
Yeah, I don't live in that camp. I think these guys did a very good job. I think we were very fortunate to have leadership like Bernanke in the central bank, and good what we would call heads of treasury. If they allowed things to tip over, who knows where we would have gone. You can see the American banking system is fixed, and now it's coming through into the real economy. Everyone has been shouting about the American debt levels for decades, and I just don't see them as a massive problem.
Do they ever get unwound? How does that story end?
What, the quantitative easing?
Yeah, the debt levels.
But I can give you an example in quantitative easing. So everyone says, okay, you've blown up the central bank's balance sheet. So you had quantitative easing in the UK. So we used to go and get these kinds of money from the central bank, and then we couldn't use it. So we used to put the money back on deposit with the central bank. So actually a lot of it just went into a circle. I think over time, if you've got a growing economy and they manage their debt in a disciplined way, everyone wants to hold US treasuries. even when we had the 2008 crisis, where did they run? They ran for US Treasuries. They ran from the banks and they ran for US Treasuries. So it is a very big economy. You know, half the world's savings come out of the US, and I would never underestimate them. They deal with the issues pretty well.
Another part of your announcement today, a couple of executive moves
Yes.
within the bank. Andy Leith has taken on new responsibilities in a new growth fund.
Yes.
People are interested in the future of Stephen Koseff. You're gradually devolving responsibility. You're doing it nice and slowly. It's a slow trickle.
Yeah, I think, look, we built from within. We've had most of those guys, Andy, Richard Wainwright, Dave van der Walt and Kieran, you know, have all been with us between 20 and 27 years. So we build from within, they run the businesses. And I'm stepping down as CEO of Investec Bank Limited, and Richard Wainwright will take that role. And Kieran and Dave van der Walt will take global responsibility for the specialist bank. Bernard and I, in addition to our current, we're in the head office, we're dealing with clients, we're dealing with staff, we're dealing with strategy, we're looking after the portfolios, we're trying to, you know, help the guys grow and develop their businesses and be supportive towards them. So we will become over time less operational. And I think that's a necessary transition. And these guys run the businesses, they run the businesses well, and we're quite confident that they'll all do a great job.
A lot of people, I mean, a bit like Brian Joffe, your good friend Brian Joffe,
Yeah.
people can't see what you would do. I mean, at least he's got photography that he could go and do if he decided to retire one day.
Yeah.
I mean, have you got any hobbies?
No, I play a bit of golf. I'm dedicated to Investec, and I always say one day I'll go and teach, but they may not have me because I might be too old, but I'll still try.
No, but the thing is, I mean, the Investec is in your blood. I mean, you started out as an auditor in your day, but you've been at Investec virtually since the beginning.
Yeah, there were 8 of us. We used to sit around a table this size, the whole of Investec. So I think I love being with the youngsters. I love teaching. I love mentoring. I don't really mentor, coach, whatever you want to call it, and I'm trying to encourage them. And I think if they retire me early, then that's what I will do. I will try and teach.
Do you feel like it's out of your control? You're still useful.
Yeah, I know. I still got a lot of energy. Very good movie I watched the other day, The Intern, where they had an internship for the over 65s. And the wisdom the over 65s brought the youngsters was very relevant in society. So there's a lot of wisdom we can give, but we need the energy of the youngsters.
There we go. Stephen Koseff, the Investec Chief Executive, still very much involved in the business of Investec while devolving responsibility for the operations to the younger crowd, just in their 50s. Thanks very much for watching. There'll be more Moneymakers tomorrow. Till then, bye-bye for now.